Hi everyone, welcome to another stock review and analysis video brought to you by L.E.A.R.N Grow Invest. I'm joined by my good friend here, Chike Verwe, and today actually marks a milestone for us. This is our very first international stock review and analysis. I'm very excited about this because we've both been investing in the US market for quite a number of years now, but we thought we'd lay the foundation, being from Jamaica, of the local stock market first before we branch out. But I think it's a very good time. We have all the resources and tools that we'll need to use to get this done. And we will talk about how you can purchase in a minute. But we're just going to use the same format. Though there's an abundance of information for the US market, we're going to really try to condense it, aim for 30 minutes. We're not going to make it too long so that you can just kind of have a good feel of the company. And then over time, we can add more things to it. So that's what we're gonna do, and we're gonna ask for your feedback at the end. Let us know, what things you'd like to see. We can talk about it in the Telegram group as well. So let's get started.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
Great. Welcome again, everyone. Let us pray. Thank you, Lord, for this day. Thank you for everything that you've blessed us with. Thank you that we're able to meet as a community to learn, grow, and invest. Give us wisdom, knowledge, and understanding. I pray in Jesus' name. Amen.
Amen.
All right, guys. So if you're joining us for the first time, again, we're going to try to keep this review very simple. One of the things I noticed with some of the earnings review that I watched from Microsoft is that a lot of companies go straight into the earnings, right? So you don't always get a good understanding of maybe the company before they go into the earnings, and they may use some terms that you may not understand. So we're gonna try to stay away from that here. Try to keep it very simple. We'll have other videos where we talk about, some of the tools you can use, how you invest, understanding some of the key terms, etc., as we go along. But we're just going to introduce you to it, tell us how you like it, and then we'll take it from there. All right. So let's start with just our understanding of the company itself. So Microsoft, very well-known company, right? So it's a company that persons have probably known forever. If you've used a computer, you've heard the name Microsoft. So they're well-known from that perspective, but you may not be fully aware of everything the company does. And one of the things that we're going to do is go through some of the different product lines. And actually, I have here some of the assets that they used to go through their earnings that can help us kind of get an understanding of some of their product lines. So I'm going to share that screen. So I'm going to skip ahead for the purposes of explaining some of the things that they do. So I'm going to use this slide here, load it up. So at the top, you're seeing just some of their main products, right? So you have Office 365, that's Word, Excel, Access that there's a consumer business and there's a commercial business, right? And, commercial can be corporate, government, just, consider everything that's not for the end user. Consider that on the commercial side here. You have Dynamics and those suite of products as well. You have the Power Platform, things like Power Apps, Power Automate. And you have within the Microsoft ecosystem a lot of tools, products, and services. Mainly, or if not all, cloud focused. So there's Azure as well, where you can it's public cloud, so you can rent space in the cloud for business or personal use. So everything along those lines. Very good chance that you're using some Microsoft product within your office or at home. So from that perspective, you can just think about them as providing those services. There's also LinkedIn. That's what you're seeing in the last line here. So LinkedIn would provide, job services. So person seeking to hire, persons, looking jobs. There's advertising on LinkedIn, some other services. There is a sales navigator function. So if you're working through a sales organization and you want to manage leads through LinkedIn, you can do that. There's LinkedIn Learning, which is similar to, which I think they bought out lynda.com a few years ago. So lynda.com and LinkedIn Learning are pretty much one and the same now. So that, hopefully gives you an idea or a good understanding of just some of the services Microsoft covers from the software side. There's also on the product side, you have Xbox, you have Microsoft Surface, so that's a hardware side. Let me actually see if I can just bring up some of those so you can see what they look like. But yeah, those are some of the things. I don't know if you want to add anything to that, GK.
And you also have search, because they're still there. They're a competitor to Google. So you got Bing.
Yes,
search engine.
that is true.
Right. And you've also got their actual device section. So their Microsoft Surface section, which I know you use one. So yeah.
Yeah. I definitely use Surface. So this is a Surface here if you've never heard about it. So this is Microsoft.com. If you go here, you'll see, a few of the products that we speak about up top here. But, Surface is there, Xbox is there. Then of course on the Xbox side, they would be, competing with like PlayStation and those companies. So yeah, we'll share this link in the description of the video. You can take some time, go through it, and just have an understanding of the breadth to the type of products that they cover. So yeah, I think that's good to go there. So what happened yesterday? They would have released the earnings for Microsoft for their Q4. So that's what we have up on the screen now. So the wonderful thing that I like here, Chike, is that they gave us all the downloads relating to the earnings call here. So you have the slides that I actually just shared something from. We have the financial statements in Excel that we can download. Yep. There's an Outlook document which speaks to what they're expecting to be for the next, financial year, and some other information here. So you can actually download this and get access to everything that we're going to share here. So we're going to look at the financial statements now and then come back and go through the highlights, right? Let me load the financial statements here. So that's what you're seeing on your screen. So we have the 3 months ended, that would be their Q4, and then we have the 12 months. I'm going to focus mainly on this column here because we want to focus on the overall year, because they are starting a new financial year now, and likely you're going to have Q4. Well, being a previous Microsoft employee, Q4 you're going to see a major push in almost all categories. But of course, we have the case where based on the climate that we're under pandemic, then in numbers they would have missed a few in terms of their targets. So I want to focus on the whole year, I think, to keep things simple here. So we have total revenue of 192 billion. So all of these are in millions, by the way. Let me just say that. So when you see 198,000, it's 198 billion, right? And that just gives you an idea of just the amount of money this company brings in.
Generates.
Yeah, man. So 198 billion. So compared to 2021, there's growth there. That looks like to me about 20% growth there. If my math is correct, a little bit over 20% growth. Cost of goods sold would have brought us to that, which means gross margin is 135 billion compared to 115. Again, an improvement on the year before. So with a company like this, you're gonna have investments in R&D. Because development of new products, investments in various areas, you're going to see that line item. It's not something we'd see for a Jamaican company, but we're going to see for Microsoft. You may see this for a pharmaceutical company, but you're definitely going to see it for Microsoft. We have sales and marketing. That's a line item here that's relatively flat from the previous year. General and admin has gone up maybe about 15%.
Salaries.
Yeah, salaries, things like that. So our operating income 83 billion, and then net income here would have been 72 billion. That's up almost 20% from 2021, right? So to me, those are definitely good signs in spite of where we are in terms of the pandemic. So that's good. And we'll talk about the price movement throughout the pandemic a little bit later. So we have EPS. I know one of Chike's favorite things here. EPS. So we have 9.7, well, $9.70 basic, up from $8.12, and diluted 9.65, up from 8.05 the year before.
Always better to use the diluted as well too.
Yeah,
Because
you want to say what?
Using the diluted share amount incorporates any kind of shares that are going to be offered via employee incentive, director to the directors, etc. Your long-term incentive plans and so forth. And it encompasses all shares of the company. You don't want to have a situation where you're calculating on the basic number of shares, or looking at the figure that is on the basic number. Next, you see it drops significantly because at some point in time during the course of the year, they then let off a long-term incentive plan of shares that were held back for those persons, for those employees, etc. And it just
Yeah,
comes down and then dilutes everything and drops the share, which you see actually, it drops the basic share price, EPS price, down to 9.65. 5 cents loss, not really anything big,
exactly.
but at the same time, in the grand scheme of things, it is recommended to be focused more on the diluted shares because it encompasses everything than the basic.
Okay. All right. So that's income statement. We have the balance sheet here as well. So let's go through that for a few minutes here. All right. This is also in millions. So we have cash and cash equivalents. This is 13 billion, slightly down from where it was the previous year. Short-term investments would have been down as well. Total cash down 26 billion from 130. Inventory. So this I figure this includes everything. Whether well, I don't think they would include software as inventory here. So this would be like, I guess, hardware, infrastructure, anything that is available for sale. So that's 3.7 billion. Other current assets 16 billion, which brings our total to 169 billion. So that's down seemingly about 10% from the previous year. Property, plant, and equipment 74 billion. Now they have a large amount of property, plant, and equipment. Data centers all over the world.
All over the world, yeah.
Office buildings in multiple countries. So this number, as you see, has grown from the previous year by about this looks like what 25 billion in terms of PPE. Right of use assets are there, goodwill, and then of course intangible assets being 11.2 billion. All right, so that would have grown as well. So assets currently 364 billion, up from 333 billion the year before. Let's look on the liabilities side. Accounts payable 19 billion. Accrued compensation, that's 10.6 billion. I'm just going to focus on the things that kind of stand out here. Long-term debt, that has decreased by about 3 billion. Long-term income tax, 26 billion, roughly the same figure from last year. Yeah, so everything here, it seems kind of, negligible, just a few billion different from where it was the year before. So total liabilities would have grown by 7 billion, and that would be mostly attributed to, I guess, the current liabilities increasing. That's what I'm seeing here. So accounts payable would have grown short-term unearned revenue. So that made this 95 billion as opposed to 88. And so we're seeing that about 7 billion difference being reflected here. All right. All right. And we have retained earnings of 84 billion. All right. So that's a lot of cash, a lot of capital there. All right. Anything you want to highlight here, Chike, before we move on to your favorite, the cash flow statement?
Well, it falls into what you just highlighted and going into the cash flow statement. The fact that they have a lot of cash in the current environment. Not so much about the pandemic anymore because for the most part, the United States is really past the pandemic a long time ago. It is what it is for them. It's really now about the other things that they're talking about now. And actually, I like that we're having this discussion now because today basically is or earlier today was the biggest thing on everybody's mind, which was the federal rate interest rate hike that was going to take place and how much it was going to be. And it was just 75 basis points or 0.75, which now carries the United States interest rate up to 2.5%. But in all of that, most companies saw a drop. That combined with the fact that, or not fact, but the talk of possible recession on the horizon for the United States,
Yeah.
even though they're having low unemployment numbers and so forth. The market wasn't or not the market, but the consumers, because we know that's their economy is consumer driven pretty much, and consumer outlook was kind of taking a dip in terms of everything going down. You had other big companies or big company like Walmart, revising. So in talking about Microsoft now, all companies took a hit when Walmart revised their growth prospects. And it's actually nice to see that when Microsoft did their earnings call, given the situation of the interest rate raise that is going to happen, I mean, there's still a lot of confidence with the company. There's a good page at
Yeah,
the
we
matter of
saw
fact.
that. We saw that as well, definitely in the response. A lot of the reviews I watched in preparation for this, a lot of persons still have great confidence in Microsoft's outlook, especially within the next 12 months.
Yeah. The biggest thing actually is in that same report that you're looking at. If you bring it back up, you go to that metrics, their earnings release pages, and the metrics section is really where I would want to focus on with respect to how the company is set up. Pretty much in terms of this entire discussion, yes,
Mhm.
we see that so far they've got a very strong set of financials so far. Balance sheet really good. Their income statement also very good in terms of their earnings. But where it really shines is when you actually go to the metrics page on that link. Let's see if
Metrics
we can put.
page, it's one of
Yeah,
these.
no, I don't think it's in the Excel. You have to go back to the original page that we opened it from.
Okay, hold on.
Right?
Here.
Scroll down and go to metrics. There we go. No, you're going too far. Too far. It's up further. Up. It's a link to the right. So earnings release pages, metrics.
Okay.
Right. When you bring that up, you really see where they've been thriving. So as we were talking about the different product lines, you actually get a very clear feeling of where Microsoft is heading, what is more than likely going to be their driver going forward into the, I guess, what you would call the immediate future. So maybe in the next 12 months to 12 to 24 months.
Yeah.
Because when you look at it as it stands right now, so that for that Q4, look on where their revenue has been coming from, and you will see. Notice for the commercial bookings growth year on year, and what falls underneath it. I saw the cloud the cloud gross margin up. What's that? 69% for Q4, right? Right
All right.
about now. It's higher than basically nearly every other thing on this list for what Microsoft is doing currently. Even look at it, Office 365 commercial growth. That's only about 14%. We got a 59% there. Let's see what that was. Scroll down a little bit. So there's 59%, and that is on
See the
our
subscribers. This is what you're talking about.
right. Yeah. So I mean, right. So that's there. So these are some of the metrics that in listening to other earnings calls that were being discussed for companies like Microsoft, investors are very keen to see. So they want
Yeah.
to see subscriber base growing for the market, because one of the main products for them is Microsoft 365. Now the
Yeah.
main product for them is Azure Cloud. So as it stands right, they are seeing that growing and growing in that level there where it's in high percentages, way past 50%, etc. Bodes well for the trajectory of where you see Microsoft possibly spending the rest of their R&D, that large cash pile that they have in terms of being able to spend. And additionally too, as it stands right about now, you have to look at it as the company in the earnings call, I believe it's there, but as the company basically or all companies are in the current storm that the United States is going through. It's good to see that a company like them, they're so well placed, and we look at the cash flow statement in short order, that they
Yeah.
can now go out and continue to either buy up other smaller companies that fit their product lines or their innovative section and so forth, and basically progress from there. Whereas other big companies just like them are pulling back, are not making any further moves based on however they're currently positioned in their financials. Microsoft currently sits very nicely with that. So keen thing to look on as we go through the financials. That's one part, but it's basically identifying where truly most of that revenue for them is being generated. And this is a really good page. It
Yeah.
shows you one of the core things you need to be focused on in terms of looking to see what's happening going forward for them. Where is the earnings really? Where is it coming from? So we already identified clear on the horizon is A, it's cloud,
Yeah.
and B, it's their subscriber base for Office 365. That's the two biggest standouts for them currently.
Yeah.
You know.
Yeah. Agreed. Agreed. And I just shared the link to that in the chat so you guys can check that out as well. So let's quickly go to the cash flow, and then we can just go back to the same highlights page that we were just on. Yeah, so Chike, I know you're a cash flow guy, so this is your show here.
Yeah, so most important thing for me as a company, it's what are they doing in terms of generating cash flow from their operations. So you got your profit at the start. Let's take a look at what happens at the end as it starts to go down. So you got the regular things that are going on there in terms of depreciation and so forth. But the final part, the first part is, I believe, is operating cash flow. So keep going further down. And we get to that first, right? So that first line item there is net cash from operations. As we are seeing there, that's a growth of from 76.89,
From 72, yeah, to that 17 billion added.
right? So that bodes pretty well. It shows you, and it's positive.
Yeah.
Many companies,
I know which company. Listen, don't say it, Do not.
many companies are not seeing positive cash flow, and so forth. So this is what I like to see. I mean, as a long-standing company that Microsoft is, by the way, you would hold them to account that their operation should be shored up, that it would be positive. You start seeing a negative set of operations from Microsoft, and I'm pretty sure
Yeah,
we'll be
man,
having serious
that's a
questions.
great warning sign there.
Yeah, things are falling off. On the financing side, well, you got what you got there in terms of repayment of their debt, and you can see that they're putting their money to use for their financing
They've
is
actually been
by
repurchased stock now.
repurchasing their stock.
I noticed as well.
That's
Yeah.
also a good thing too. We'll get to the simple metrics in short order, but when you look on where the PE is, and we'll illustrate that in comparison to their peers as well too. If the market is depressed right about now overall, and I have cash, why would I not want to? If I'm able to not only invest in R&D but also make the stock price more lucrative. We've had two big stock splits already from two
Yeah.
big companies, right? We've had
Yeah.
Google stock split, we've had Amazon stock split,
Yeah.
right? Um, they are in ways competitors to them. So in that sense,
Yeah. I
they
mean,
they have
that was just based on the share price, though. I mean, Amazon, I don't know their history. I mean, they've been around a very long time. I don't know if they've done a stock split before. I mean,
Yeah, they
at
do.
the price of $260 something, I don't know if they would consider a split. I mean, but it's Microsoft definitely doesn't grow as fast as we've seen, Google or
Correct.
Amazon grow in terms of stock price. But as we're seeing, that's not for the fact that it's
That's not really, yeah. Yeah.
yeah.
This is about good and steady growth, predictable, as best as possible, predictable growth. A company who is basically keeping up with the trend, with the times as technology improves and so forth, ensuring that they are not left behind, right? And
Yeah.
basically it shows there. And that's a big thing. And well, I term it a big thing when some people might not like when a company is buying back shares, but
Why not? I mean, I think that's a good thing.
they have a some
It
might have a growth that is there's
means
better
your
ways.
share is more valuable
Well,
if you
yes, that's
hold it.
immediately what it should, but also some persons have a growth with that. Persons might have a. I've seen persons have a growth with the fact that if you're buying back shares, you could have put the money to better use. But the truth is, if you have a huge cash pile and you're already investing in R&D, you're already doing all of this stuff, then and the economy is currently depressed are showing signs of depression, right? Why not reclaim portions of your stock to basically shore it up for the future, that it will be more lucrative, it will be more sought after. So I like that. I like what I'm seeing there. And then
Yeah.
you go down to the other part, which is basically now the investments in terms of how they've been putting the money to use from that cash in terms of what they've been doing. Um, not really big stuff you can see, but everybody needs to invest in property and equipment. They're doing that.
Yeah,
They're
because I
doing
mean,
it.
I think that mostly, I mean, and we can probably, I don't think we'll have the time to go through the 10K, but I mean, usually you'll get a breakdown as to what these are. I know they invest a lot in terms of like data centers,
Yeah,
maybe new office spaces, etc.
yeah.
And I think what I remember hearing from the earnings call is that they're going to be adding two data centers within the next year, and that's going to be a severe, a large amount of investment in terms of capital. So 23 billion in the previous year, you're likely to see something similar for the year coming up as they continue to expand their footprint in terms of data centers for their customers.
Well, you see where it is required, because you can't be expanding a cloud based service
Exactly.
and not have, at the end of the day, people might not understand, but cloud still requires some place to be stored. So yeah. So they still need space, they still need areas, various data centers worldwide, for not just storage but also redundancy as well too, in terms of being always online, and persons having access to their data, big companies, small businesses, etc. So
Yeah. So Paper Plate asks a question: where are the losses coming from? So I don't know if you're asking if there are any specific product line maybe that's not making a profit. I don't believe I saw that even in the slide that we looked at before. Let me see if I can find that one.
we'll go back to the metrics again. The metrics will show you what has dipped.
The metrics will show us. Hold on.
Yep.
Did we say anything in negative? Maybe
Yeah,
Xbox content.
so Windows OEM revenue growth has been negative. Xbox
But
content and
it, it,
services.
but this was just for Q4. I wouldn't say if it's what it wasn't a loss for the entire year. So it was still
No,
up 3%.
right.
So
But
there's
but but string it along for all of the quarters, for the quarters before you. You have a couple of negatives there coming. There hasn't been significant growth in certain areas, as you can clearly see. So that would be a contribution to some things. But if we're looking directly for the losses,
yeah,
in terms of what might be occurring, we want to genuinely look on in terms of the revenue line itself. So we have to actually go and look to see where the money has really jumped up for them on the income statement, pretty much. That's where
okay.
I'll be looking at this
Well, we
point in
had
time.
that income statement here. Um,
So yeah, so what basically has jumped up are, well, at least on the gross level. So the cost of doing their revenue has increased a bit. So has their services. That's under the line of cost of revenue, right? So there's been an increase. That's basically about what, $1 billion, right? 19 billion versus 18.
Yeah,
So
but
there's
I mean, they did 198 billion as opposed to 168. So that,
right. So they've got a higher level of revenue. So it's
in
not
terms of
really there.
percentage, that's probably lower because
Right.
I mean, yeah.
Well,
So
it is. They've actually in relative sense. So yes, you're right.
yeah, man.
So
So
going further down, we'd have to
I
find.
don't know. I don't know necessarily what paper plate is asking for specifically. The business. I mean, in terms of maybe opportunities to conserve cash. So he rephrased or they rephrased and said what areas are bleeding cash. I mean, the cash flow statement would be where you spend the time here. If anything that I can think of that you can say here, some persons would look at the amount being spent on stock-based compensation. That is an expense to the company. So this is 7.5 billion in stock-based compensation. So if they didn't do so, this is pretty much an incentive to employees that they provide. If they did not have this, they would save 7 billion. But I mean, again, does that really move the needle for them is what I would ask, because that provides an incentive for the employees to perform, which is probably driving the sales that they get anyway. So if they don't have that expense, would they still perform in the same way? Right. So if you work for a company that provides you with stock as a part of your compensation or bonus, that's something that will make you work harder to generate output. So I mean, in terms of areas where they're spending a lot of cash or bleeding cash, I'm not sure that I would say I see any cause for concern based on what I'm seeing now. If we're probably analyzing over a couple of years, maybe we can maybe spot some
Actually,
trends there.
if you're analyzing over a couple of years, the
Mm.
picture is even better that they've not been
Yeah,
doing.
and that's how we should be able to see that on Ticker. We're gonna get there soon. So what probably can do, Chike? I mean, I don't know if you want to just finish out the cash flow and then we go
Yeah,
straight to Ticker,
definitely,
because we're gonna be looking at the price history next.
definitely. Yeah.
So you finished here? Or do I move on to Ticker?
Yeah, man, you
Or?
can.
Okay,
Yeah, you
okay.
can.
All right. So guys, we are on a platform called Ticker now. So we actually started using this tool. Chike and I have been checking it out for a couple of weeks now. If you're interested in using the tool, we have the link in the description again. There is a free version where you can get a good understanding of what it provides, and then of course you'll see us use it as we go on. Omar is asking what the net cash at year-end. I believe that was 14 billion.
Yeah.
Net cash in a period, yeah, call it 14 billion. So that was net cash. All right. So I mean, I think 3 years, to give context as to where we were before the pandemic, might help us here. So before the pandemic, you'd have seen Microsoft trading somewhere around 140, because this is March 2020. And then companies like Microsoft, Zoom, most of the technology companies would have seen actually quite a bit of growth. So Microsoft went as high as about $340 somewhere here in 2021, and we've seen since November of last year a bit of a correction. So it's year to date, we're coming down from the 340 that we had last year all the way down to about 250. That was right before earnings this week, and then since then it's up to 268 now. All right. And you're seeing here the volume of shares, of course, a lot of volume traded, 39 million shares traded just yesterday alone. So it's a stock that trades a lot of volume. So let's see here. So one of the things I like about this platform, that I'll just say briefly, you get a lot of useful information about the company all in one place. You have things like news, financials, valuation, etc. that we'll go through as we're doing the review. So we're able to see the same information here that we're looking at, the income statement, balance sheet, etc. So what we can probably do here, I know this is one of the things that Chike likes to do, ratio analysis. So we can, let me zoom in here. I think that's a little bit better. Yeah, so we're seeing ratios like return on assets over the last 5 years up to 13.8%. Return on capital, return on equity is at 47%. Yeah, so again, over the last 5 years, just growth in all of these areas. Gross profit margin has been fairly constant here. So 69% for 2021.
SG&A selling general and administrative expensive margins. Expenses, sorry.
Down 33%, yeah.
Yeah.
EBITDA is at 48%. Net income margin, that's probably one I don't want to focus on. That's up 36.5%. That's up about what? That looks like about 40% growth in the last 5 years. I think that's very good. Let's see what else I want to focus on here.
Right, go back up. Another good indicator right there is inventory turnover. You want that being done.
The higher the better.
Yes, the higher the better. Yeah. So 21 times, pretty good, coming from 15 in 2017. Even with the dip, even with everything going on, 23 times actually, if you're looking at the at the most current year, that's pretty good. You know, and then their working capital turnover as well too, also very, very good.
Yeah.
So this is what a growth, what a long-term company going through its phases, etc. Looks like pretty much, you know.
Yeah, and as I said, when I was going through this, I was like, Chike must be happy to see these ratios and how they're trending.
Yeah.
So current ratio we see actually a little bit down almost 33%. But again, in context here, they
still
have
high.
Yeah, I mean, yeah.
My threshold is actually lower than that. Is in the ones. I think it's 1.5. I think. So they're at 2. So they're pretty good. They would be green or blue.
My only issue with Microsoft is dividend yield. That's my only issue with them. I mean, 0.9%. That's less than 1%. We'll talk about their dividend soon. But yeah, go ahead, Chike.
Their dividend yield is based on when you got in. So of course, if you're buying at $200, that's the case. But the person who actually took that chance before they were even
back in the day
at their is sitting on a pretty nice yield. So it's all about when you stepped in. And at this point, at this current price, with respect to their dividend yield for the last 5-6 years, you really can't expect anything. It's about cap gains that you'll be looking at, unless they do something else. It's not
fair enough. So let's look at solvency. Debt to equity was 108%.
That's high. That's high.
No, it's at 58%.
Yeah. Good work to claw that back.
Say that again?
Good work to claw that back.
Yeah.
You don't want that high at all.
So for those who aren't aware, the lower this number is, the better, right? In terms of liabilities to assets, that's what we're seeing there. Is there anything else you want to call out here, Chike? We're trying not to make it too complex here.
No. This is pretty good. All that persons need to understand is when you're looking at this, basically this is the percentage of how much debt is over these various indicators. You really do not want to have high debt over your equity, because at the end of the day, it means it puts the company in in question if they're able to pay their debt back, right? So you wanna keep that low. You really want that to be a low number. So 100% of total debt being equity was basically all of it, right? Anything that you were looking at. So if it's now at 57, I still think that's high, but coming down from all of it versus only as we coming down, you see it's half. So the current
Yeah.
what's that
Yes, and
LTM is
it's
basically
trending in the right
trending
direction.
downward in the right direction. So yeah.
Yeah. Amen. All right, and the thing with this tool, it doesn't have the 2022 figures as yet. I figure this may take a couple of days since it was released just yesterday. We're getting an idea as to how the last few years were. So let's see what we have on the valuation. Anything you wanted to point out here, GK?
Yes. So for the valuation, let's see. So the valuation, I would say we want to actually look on, more importantly, while this is great to look at it here, look at them in comparison to their competitors. If we're gonna look on their valuation, so pretty much it's who they're going up against, right? So Microsoft is going up against so as we know, as we said, there are different segments,
Products would
sectors.
go up against different customers, yeah.
Right. But Microsoft pretty much sits lower than most with in the software category, with differential between Oracle and SAP, basically, in terms of the SAP is basically databases and so forth. But in that category, I guess what we would want to look on, you'd want to really look on the segment where we saw the metrics being the highest. So in terms of that, where it is. So it's not software, it would be IT services, pretty much. Just take a look on that and see how they're competing with respect, or we actually want to find out if we find Amazon there, because we want to know about cloud solutions. So does Amazon fall into that?
Cloud? Let me see here.
Yes,
I don't
no,
know if it has cloud. I'm checking. Maybe we can check Yahoo Finance. I don't know if it gives us that
because
that
we
competitor analysis
we
here.
definitely want to see that, because we want to see if, since that has been the biggest, one of the biggest, sorry, areas of growth for them, we genuinely want to see how they have been, siphoning or
Let's talk
taking
about this
back.
competition. Yeah, you have any tool that would show that on your side? Would you have any
I
tool?
am
I'm not
looking to
seeing that in the
see
way
if
that
I
I think we
see
want
it
to see.
on my, hold on a second. I'm going to see if I see it on my TD Ameritrade of itself.
Yeah.
No, they just flat out put them against Oracle, ServiceNow, Palo Alto, and Fortinet.
Yeah,
Pretty
because I'm
much.
not seeing. Yeah, I'm not sure where Ticker would categorize that. So I don't know. I don't know if we can get that data now, especially since yeah. So we may not be able to get that comparison, but that is definitely worth looking at. I imagine just understanding how they stack up in terms of their competitor. Maybe it would make sense for us to do a kind of tech industry analysis, but that's gonna be quite a long video. I don't know
Yeah.
if we can do that in an hour or less. All right, so we have about 15 minutes left. We did say we'll talk about dividend. We did see that number there. Hold on. I think we saw dividend. No, I think it was under the news section here. Hold on. So they pay a dividend once per quarter. So there is a dividend coming up on August 17 of 62 cents. So if you're a shareholder, you'll be able to get access to that dividend. This is upcoming news. So that's one of the things I like about Ticker. You're getting to see all the things that are upcoming now. A lot of these things probably won't be meaningful to you, but this is something that I'll just come through and check. You can see this in the free version. So if there's anything that you think may be interesting to note for that date, you can go through it, and it gives you, I guess, up to 3 months in advance. So you can see anything that is expected there. I did want to go over briefly there the outlook for the year. So let me see if I can bring up that outlook here. Sorry, one sec, guys. My mouse is not responding.
We're going to estimates.
Yeah, I don't know if you want to bring it up on your side because my mouse not moving here.
1 second.
Stop sharing.
Let me just have it
All right,
up.
so I'll take some questions while we're bringing that up. So Alian, no mention of stock splits as far as I'm aware. As I said, the price is not that high compared to where Google and Amazon were. So I think Amazon was almost at $3,000 before they did their split. I don't think Microsoft stock is out of the reach or considered out of the reach in terms of price for the US market. Using platforms like Interactive Brokers, again, we have a link in the description for that. You can purchase fractional shares. So you don't have to buy one whole share at $268. You can buy 0.1, you can buy 0.2, depending on the cash that you have. All right, let me take the next question here. Daniel is asking, which broker in Jamaica allows you to trade? Daniel, we recommend using Interactive Brokers, setting up an account for yourself because of the fees that the brokers currently charge to purchase US stocks, right? I think there's what I have heard is a minimum fee of $50 US, right? So let's say you have your $268 and you want to buy one Microsoft share. You have to now pay about $311 to purchase to do that one transaction. To me, that's a very high fee. Use Interactive Brokers. Your fee is going to be to transfer the money, and I think they're I don't remember the fees on Interactive Brokers, but it's not going to be anywhere to the tune of what you're paying locally. So I wouldn't recommend that at this point. If it changes in the future, my recommendation might change.
Yeah.
You have the screen up now?
Actually did a second ago. 1 second. Hold on. Let me bring it back up. And there we go. Hold on. Right. So here's our estimates. Annual estimates. So let's take a look at that in terms of what they think. So we have actual 2022 in terms of, well, it's actually already there. With respect to revenue, so they're thinking by time next year, the estimated revenue change would be about 11%, and then they have for 2024. I like that they go all the way out. Actually, they go even further out, dependent on the plan you have. But in the free version, they at least carry you out all the way to 2024, right? So 2 years ahead, which is not bad for a person who is a value investor. But you know, if it's not a company that they're looking on for holding for the next 10 years, and they wanted a shorter term, like it's just 2 years, you can get reasonable amount of information. So you got the revenue. They're expecting a dip, and then it will go back up. They're thinking.
Zoom in a little bit, Cheeky. I'm not sure.
Let me see.
Yeah,
See,
that's yeah, man.
Right. So let me see what we would focus on now. Revenue. We look on the change. So as I said, we're looking at a change of it's going to have a dip, and then it comes back up. Net income. They expect a dip for 2023 as well too. That it will drop down to 9.4%, and then it will jump back up to 18, even better than their actual net income for 2022. Let's see what happens there. Something to look at. The EPS, they're expecting it. So it seems that, and I'm wondering if this is just because we've got other things on the horizon, that economic factors for the United States that impact it.
That was one of the things that were asked on the earnings call, if their outlook is based on the current economic climate, or do they project things to get better?
Yeah.
The CFO did say that it's based on the current climate.
Well, if it's the current climate, everybody's calling for recession by next year, for 2023. So I'm gonna say with fair assumption, and in my opinion, that's where we're looking at. So because look, everything is taking a dip, especially the things that we wanna be concerned about, EPS and so forth, or EPS by general accounting acceptance principles. that is a huge dip if it does happen, right? In terms of 2023, jump going down from 19.9% to 4.1 and then jumping back up in 2024. That also informs me if they're looking at this, then they expect that if they're well, it has been it was said as well too. If the United States experiences a recession, it won't be a long one. It should be a short one. We'll see what happens if it even happens for them. But clearly it's being priced in that yes, 2023 things are going down. There's no question about it. And then it will come back up afterwards. I think Jeremy, you have to share your part because this is all locked up at this point in time with this
Okay.
stuff.
So I did find what I was looking for. So let me remove your share mine again. So this is actually what I wanted to show because I didn't. They actually created a document with the outlook as well. I think it's a little bit easier to digest for persons here. So they did share what they're anticipating to happen. So this is their outlook for Q1 that they're expecting, similar to what Chike was showing just now. So these are the different things that they're expecting to see. So intelligent cloud, they're expecting to be, between 20.3 to 28.6 billion. Under the personal computing segment, up to 13.4 billion, and the cost of revenue is going to be somewhere between 14.9 and 15.1. All right. They would have shared here. Well, let me actually skip this segment here. Let's see if there's anything that I want to call out here. Investments in software that increase efficiencies in how we operate our server and network equipment, as well as advances in technology, have resulted in lives extending beyond historical accounting useful lives. So what they're pretty much saying here, I think, is the estimated useful life of server network equipment has been extended from 4 years to 6 years, right? So let me go back here, and they're saying what does not change, the historical depreciation expense and the total depreciation over the life of the asset, and what are the impacts. So that's what they're pointing to here. All right. So this is what you can expect for Q1, and this would be the full year outlook. Right. So let me stop sharing this here and go back to your on the estimates, GK. I think
No.
so, right? Estimates, yeah. Because this would be 2022. Yeah, this would be what we're talking about. So there, I think this is saying 11.
Right.
Yeah, 11% growth for revenue.
No,
Net income, they're expecting 9.4%. Net income margins 34.5%. So that's going to be more or less the same where it was the year before. EPS they're expecting to grow by 4.1%.
Right.
Yeah. So I mean that I think this is, I mean, of course, being estimates, you have to look back on quarter by quarter and see how things progress. That's typically what we do. You don't want to just take the year's forecast and take it as written in stone. Each quarter will kind of have a life of its own. Yeah.
What I can say though, if we're looking at, well, it's not there for stock price because I'm not seeing that one. But TD Ameritrade, and actually it's across the board, both on the other side. They've got the stock price jumping right back up in the next 12 months, pretty much. So by the time we get back to Q2 of 2023,
I think it will, and the reason why I think so is that because, as you said, they're at the tail end of the pandemic. I think some things might have actually not performed as well on the commercial side for them as it could have, and so I think things look favorable for them, at least for the next 6 to 12 months. In my opinion, at full disclosure, I'm a shareholder of Microsoft, so I know the company very well. I've been a shareholder for over 5 years. So I mean, I think they're really poised to have a good year.
Yeah.
All right, guys. So thank you very much. Hopefully this was a good review. Let us know what you think. We tried not to put too much information, but let me know how the format was, how you liked it. Give us your feedback in the Telegram group. If you're not in the Telegram group, definitely consider joining us. I think we got all the questions here. Yeah, so Daniel, I really, really do recommend that you use Interactive Brokers. There's a link in the description that I would have shared. Use that link to sign up for your Interactive Brokers account. It is free to sign up. You can fund the account through wire transfer or through an app called Wise. That's something that we can help you with in the Telegram group, but we'll be doing a video on it soon. We'll do 2 videos. 1, how to use Ticker. 2, how to set up and fund your Interactive Brokers account. And probably a 3rd one as into how to analyze companies on the US stock market. I think those 3 videos would be helpful. All right. So what we probably didn't do here, Chike, that we might do at some point is we didn't go into any technical analysis for the company. I didn't think it would make sense for us to do that since we didn't introduce it before. So maybe one day we'll get that in.
Most definitely, because there's a lot of data on that. That's where most persons are focused on anyway for these companies.
Yeah. But I thought it would be good to kind of go through, as I said, most of the earnings review that I see, they focus all on the numbers. I think for some of our community members that may be a little bit too much. So I think the way we do it helps you to kind of ease into your understanding of the company. All right, guys, thank you so much for being here. We do have our Fosterich video. They did a 10-to-1 stock split. We're going to talk about that on Friday. So join us for that one. And we do have our investment class coming up September 3rd. The link will be available August 1st for you to register. My guess is the registration is going to fill up very quickly. So you want to sign up as soon as possible. All right. Thank you so much for being here. Enjoy the rest of your day.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.